Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, February the 27th. The year's 2019. Let's talk trading. How to trade like a pro. 80-20 like a pro. Pareto's principle, the 80-20 rule. 20% of your profit, or rather, 80% of your profits come from 20% of your trades. 80% of your losses come from 20% of your trades. Which one of those is true for you? I'm sure you've heard this principle before, and it applies across life. You know, 80% of your headaches, problems, are probably going to be caused by about 20% of people you deal with. And that's kind of interesting. I applied that once in business. I got rid of the 20% that was causing me 80% of the headaches. Readjusted, and you know what happened? It balanced right back out. There was a new 20% that caused me 80% of the headaches. What was interesting, part of that 20% was some of the people who weren't causing me headaches before. I guess they decided to step up. Anyway, what's that got to do with trading? Well, if you really look at your trades, and pro, I'm not talking to you, but I know you're going to probably think I am. You see, you might have that one trade that took you out. So that's part of the 20% that caused you 80% of your losses. So if you're a pro, what you want to do is, if you want to 80-20 like a pro, is you look at what you're doing, you look at how you're trading, and you see what part is causing, what 20% is causing you that 80% of losses. And then you eliminate those. And then you look at the 20% that's giving you 80% of your wins, and you try to make sure you keep doing that. So for example, maybe there's one pair. Maybe you trade, say you trade 5 pairs, but this one pair you just can't seem to get right. Well, don't trade it. That would be the 20% that's causing you that 80% of your losses. Now, the other thing about trading like a pro is you're not going to let 20% really cause you 80% of your losses, because you're going to make sure your loss on any trade is at or below your risk level. So once you achieve that, it's not the dollar or percentage that you're focusing on anymore. You've got that under control. Now you can look at things like your execution. Maybe you rushed a trade. Maybe it was just the market just went against you. You know, as I discussed yesterday, trading is not like baking. And that's one of the reasons why you should not fear putting a trade on. Well, it could, yeah, it could. And that's why we do this. You know, that's why we employ a stop loss, you see? Because we're saying when we trade that we are willing to lose or risk a certain amount on that trade. We're actually willing to lose that amount of money on that trade. Now, the other part about the 80-20 is I kind of touched on yesterday in the trading is not like baking. Let's say you're baking and maybe you put a couple of rows of cookies in the oven. Well, you know, at the top's going to be hotter at the bottom, right? It's just the way it works. And so maybe one tray is ready. Well, you're not going to leave that tray in there and let it burn. No, you're going to pull it out when it's ready to be pulled out. Same thing with trading. You know, you're not going to let that one trade burn your money, that is. You can pull out. You don't have to let it hit the stop loss. You might have a couple other trades that are positive, and so when you add in that one negative trade, you're overall positive. Just take them all out the oven. It's like, okay, that's it. Because you don't know what's going to happen in the future. And you don't want that losing trade to be eating up the profit. So you just take them all off, wipe the slate clean, and keep going. You know, you're applying that 80-20 again. You're saying, hey, this one trade's causing me 80% of the loss. This one trade's is the loser. But I've got a couple of winners that are more than offset the loser. Let's just close them all. Or you could close the loser, bring your stop loss up on the winners. And so the worst thing that could happen is that maybe you break even or maybe you make a couple of pips. You see, that's the other thing about the 80-20. You don't have to make, if you've got a loser, you don't have to make it back in that pair. You can offset it with other pairs. You trade the big picture, not each individual trade. Meaning, you're not so concerned about whether a trade is a winner or a loser when you're looking at the big picture. It's like, is your portfolio growing or shrinking? You want to grow it. So maybe you're, you know, let's just say, for example, let's say I was short the euro yen and it went against me, but I didn't want to exit that trade for whatever reason. I could go long the dollar yen or the pound yen. I could offset it with another one. So if, you know, if the yen is rising and I'm short the euro yen, that means I'm short the yen. Well, if I go long the yen here and long the yen there, maybe it can overcome and I can exit with a profit. So I might have a loss on the euro yen, but I've got offsetters in the pound and the dollar yen. See, once again, knowing what I'm trading the yen long, but the euro short, right? If I short the euro yen. So if the yen's taking off, this is going down. Actually, I guess I said that wrong. If the yen's going up, no, I said it right the first time. This is going up. That means, and I'm short. That means the euro's going up, the yen's going down. So I offset it, as I said before. And please notice right here, they're all filled. So there was 5 yesterday down here that you could have taken advantage of. Once again, that's on you. I alerted you. That's all I can do. Okay. We put in a new yearly high. We're above the yearly open. And we're green across those chart periods. And you can see here, this was first day of the week high. You see we broke it, Failed to hold it. Nice place to short. Here was high of the day one of the month, high day one of the year. You see we dropped below, we came back, went above. Nice long entries. Now, somebody's going to say, oh, Harry hindsight, but no, we put this chart up and we look at it every day. So these trades are there to be had. Once we get these lines in, you can take these trades. They're just horizontal line trades at levels above the first day of January and above the first day of February. See that 3 ball there on the daily? What do you think's going to happen next? And once again, we are outside the range of the first day of January and February. And yesterday we had an inside bar. Remember, those of you who like the inside bars, we've been looking at it this year. There was a long opportunity and a short to take some pips. Now, once again, it was only maybe 10 pips or so, but nothing to sneeze at, right? And you can see here we put in some inside bars on some other pairs yesterday. And you can see it here. Once again, 81 pips. 1, 2, 3, 4, 5, 6, 7, 8 pairs. Over 100 in range with the new beast, the pound New Zealand. I guess we call it the pound Kiwi. 315. That's a lot of range. And you can see here the holo. 2 hours ago, we had a highest open and fell down, fell below the monthly daily highest open right here. And then we came and crossed back above. Once again, looking at pair strength. Remember where the dollar was yesterday? I think I told you it was down there. I said, where do you think it's going to be? You think it's going to stay down there? So that's how, knowing you're trading currency, you're not really trading pairs, I can give you the heads up. So once again, for those of you wondering, that's that currency strength indicator that I modified. Okay, that's the full name right there. And you can see we had the pivot inside or below the buy zone. So really not much of a bias. We didn't even get to the top of the zone here. A nice little short. And then finally we came up through the open, through the buy zone, and an opportunity to go long. But there was basically no bias based on the pivot. And let's just run through these charts. Rat zone. Here we had a little red rat trade, but you can see prices going back up. So just a couple of nibbles. No rats getting fat there. Okay, we took out the pivot. And there's the weekly pivot. Down here, we still haven't hit it. Keep that in mind next week. On the daily, you see, we still have a couple missed pivots here. And from January down here, and then from last year up here. Price action, what can I say? You had a 3 ball at the bottom, green at the line, 3 ball at the top, red at the line. Not difficult, traders, not difficult at all. Wick zone, in and out. You can see here, long trigger, couple pips to be had. Okay, traders, 80-20. You know what to do, and you know it's not what you trade, it's how you trade it. So go out there and drain the banks like a pro.